So it is time. It is time to reveal my secret. And the secret is... Hi everyone and welcome back to this video. This is highly requested video and it's been requested for a long time and it's finally time to do it. So today I'm going to share my strategy, not so much my strategy, just the way I trade, and there's nothing new guys, it's everything you've seen before in probably other videos. That's probably the same thing that other mentors are teaching. So I will be talking about the pairs I trade. I will take you through and explain you how I enter, like my aggressive entry, confirmation entry. We'll look into different time frames, different pairs as well. Also, I will talk about risk because it's super important if you want to pass, especially if you want to pass some challenges for the prop firms. It's really important to focus on the right risk. So without further ado, let's go and let's talk about the strategy that I trade. So first, I wanted to talk about the pairs because it is very important to choose the right pair that you trade. And you probably have heard this before, but I will say it definitely in here, that less is more. You can focus on like 20, 10 pairs, whatever it is amount you want to focus on, but will your focus be 100%? Will you be able to spot all the opportunities that those pairs are offering? So that's why I personally have cut my trading list into a really small one. I used to look at all the pairs possible, but what's the point of it? You just can't focus. So now I trade GJ mostly, GU, EU and EJ. Sometimes I look at gold, oil, but it's nothing just really for me to take in there. Like I don't feel comfortable taking those trades, so I just look, but I mostly trade GJ, GU, EU and EJ. So how do I do my analysis? I sit down at the computer, laptop or phone, whatever it is at that time. I start with daily charts. I move to 4 hours, 1 hour and then 15 minutes. Now I'll take you to the chart and I'll show you exactly what I'm looking at when I am sitting at the chart. Top-down analysis. So every time when I sit down to the charts, I start with a daily chart because that's where I can see what's actually happening. Is daily bullish or bearish. At this moment, normally I like to use at least last 5 candles, because looking somewhere in here way in the past, it really doesn't bother me that much because I mostly day trade. I don't hold swing positions. So what I do just to help myself kind of understand what is going on in here, I would take just the high of the day and I would also put the low in the day. So this is the range I'm looking to trade in. That's obviously the daily. So what I do then is I drop to 4 hours and then I see this is the daily range, and what I do, I also put high here and I will put low in here. I will change the color to black for 4 hours simply to keep it more clean and so I can understand. So these are 4 hour lines and that's daily. Then I do sometimes drop to 1 hour just to see clearer picture kind of, but I don't really use 1 hour. So I just drop down to 15 minutes and this is where I look the most. So the next important thing in my trading strategy is zones. Support and resistance, supply, demand, call it whatever you like it. So when I draw the zones, I always start with a line because for me it's easier than to focus and include all the wicks into the little tiny box. So I will show you exactly how I do it. When it comes to zones, I think the most asked question is my zone correct? And I think trading is so personal that we will always see something different. Someone will see zone in here, someone will see zone in here. So there's really hard to say where's the right way and the wrong way because we trade differently and it is very much personal. So for me, what I like to do, I take the 4 hour lines that I have dropped before and I go and try and find when the price was there, when it touched this 4-hour line. So there it is. So what I do next, I take this rectangle tool and I set my zone, or I call it resistance. I really keep my trading simple. I call it resistance. It's where the price touched it, it rejected the zone, and there you go. This is the first one. Obviously it is quite up high, as you can see. Its price is not trading in there. So obviously what I can do, I can wait for it, or I can look what's actually happening right now in the market, and I can look where are the zones in here. Now again, what I like to do is sometimes I do like to put like a line in here, and then I know that price been touching this area for quite a bit, or rejecting this area. I also can do this and see that price has rejected this exact price, which is 166,433. But what I do like is the little rectangle tool, because it gives us more precise zone. So in here where it like in here, it really comes the point where you are personal with your trading. Some will say, oh Anna, this is completely and total not correct at all, not the correct way to do it, because as we know, there's order blocks and there's right way and the wrong way to do when you do the order block. But I really don't believe that there's right or wrong way in the trading, because it truly is something personal. Now for here, I see that the price was here, rejected it, and obviously there's more to it, because if you extend this line, and this is where it can get a little bit tricky, because you see that it's rejected here, here, and here, pulled back, break. So you can say this was breaking here. Well, yeah, trading is always like this. You will see breaks, you will think now it's time to buy or sell, like in here, right? So we've broken this area, pulled back, and now we'll look for the buys. However, we can see again, if you're patient enough, you can see that in here, price rejected again. So I am actually looking for sells. In this particular moment, I am actually holding a sell position in here, which I entered in here. So I apologize for my not really smooth skills in trading view. So yeah, this is actually the position I'm holding in here. Because when you pull back a little bit, that we can see there's a zone, order block, call it whatever you want, resistance, right in here. So, and another thing that I use in my trading is also patterns, like double top or double bottom in here. So in here, the extra confirmation, although I entered the trade in here, but my extra confirmation was in here that it did made the double top, as you can see, one in here and one in there. So this is double top because it rejected it twice. So I am expecting for the price to go down, and I'm targeting these lows in here, because again, you can put the rectangle tool in here and you can see that there is order block zone, call it whatever you want. So yeah, this is pretty much, I keep it simple, I keep it clean. I definitely don't drop to smaller time frames because I don't feel comfortable at all. So 15 minutes is where I stay the most, and I look for my opportunities in the 15 minutes. Now it's time to talk about the confirmation. Confirmation really is the most important thing in the trading, because that's when you're actually going to pull the trigger, when you will enter the trade. So for me, when I look for confirmation, is I go into 15-minute charts. Sometimes I also will look at the 5 minutes. However, 15 minutes is more reliable, and I have had times where I have entered on 5-minute confirmation and the trade did not work very well. Finding a good entry and finding a good entry confirmation is what is going to make you a good trader or a bad trader. You need to have a trading plan and have a really clear rules for your entry, so you know
how much to risk, what to risk, and you can decide when exactly to enter. So for me, I use candle closure, and that's my safe entry, but I also have aggressive one. And here at this moment, I have a trade going on, and I will tell you that I entered in here, and you can now think, would this be a safe entry or would that be considered as aggressive? So for me personally, yes, there was a candle closure. However, I still consider this as an aggressive entry because yes, it could be kind of double top, like price touched in here and here, but at the same time it's way miles away. So for me, it was not good enough. So it was considered as aggressive entry. So what I do when I take aggressive entry, I split my risk. Now I will write down this in here. So split the risk. And what that means, when I take aggressive entry, I will take half of the risk on the aggressive entry. And in here in this example, you can actually see that it did made a double top. So my confirmation entry is this one. I put the stop above previous wicks. I give it a space to breathe for the spreads, and just sometimes price likes to do that, coming up a little bit and then coming down. So I give it a little bit of space. So this would be my confirmation entry in here. And that would be candle closure. So candle closed and I enter in here. And then because I already took aggressive one in here, I split the risk. So that means 0.50% in here and 0.50 in here if I risk 1% per trade. I hope this makes sense so far. So in here in this particular setup, I have two entries that I have split my risk, with this one being aggressive and this one is being the confirmation. And yeah, it does happen. They both are almost identical entries. It's just this one still was aggressive for me, so I took half risk, and then this one is my confirmation. So that's what I like to do when there's a chance to take aggressive entry, but mostly I do look only for confirmations.
The most important thing in trading is risk management. It really determines if you're going to be a successful trader or you will fail. The way we manage our trades, the way we manage our capital is just something so important, and especially when you try to pass the propfirm challenge, because they do have drawdown limits, daily and also max drawdown limits. So you need to make sure that when you trade, when you take a setup, you do not over risk. And I would never say to risk more than 1% per trade. Obviously, there is sometimes when you feel, I don't know, trying your luck or something, when you are 7% up and there's still 3% to go to achieve your target, then you decide, okay, I'm actually going to go and risk 2% for this setup. Go for it if that's your risk appetite, if that's what you feel comfortable doing it.
Let's take a look how I managed my risk in the 5ers funding program, which is instant funding, and let's see how I managed my risk. I don't know what it is, but every time the first trade I take, it's a losing trade. It's like a curse, but every time I am having a new funded account, or every time I'm trying to finish the challenge or even start a new account, it's just always losing trade. It's a curse, I'm telling you, and I don't know how to get rid of it. Although after my losing trades, I always pick it up and I slowly build my equity curve, and it's looking much steeper to the upside, which is what traders want to see. Obviously, you can see in here I did have a little bit of dip, but I did manage to get back up pretty quickly. And I think when we have a losing trades, when we are already in the profit, as you can see, I am already above funding capital in here. Taking the hit with losing trades is much easier, because you feel you have that cushion there to trade with, and even if you lose, you are still above that funding capital. So it really helps us with the mentality, with the trading psychology, and you know that you are still okay because you are above funding capital, and then it's easier to pick up and to reach the target. So this particular account was really not hard. I think it was really easy to pass, and obviously there's so many things that we need to take in consideration. Like we need to look at our risk reward that we are using. We need to look how consistent we are, and obviously, as you can see in here, the pairs we trade, and we want to see the consistency. And if I trade these four pairs, I don't want to see 10 pairs. If I know that I trade 4, then I want to stick to those 4 pairs. So it's really important to have that trading plan, to have your risk set so you can easily pass the propfirm challenges. And for me, I really love this instant program because it offers us great opportunity as a traders to start to trade with bigger capital. Instant funding is a great program for the traders who don't have a big capital but they want to trade straight away the live funds. Now this is the example that I just showed you before in my dashboard. This is the example of the program. So you start to trade with 10,000 instant funding account. Your profit target is 6%. Your account leverage is 1 to 10. And then your stop loss required for every single position, you do need to have a stop loss which is not greater than 1.5%. And you do need to reach 6% target, but you have 180 days, which is half a year. You have enough time and plenty of time to finish and achieve your target. And don't get scared that the drawdown is 400, which is 4%. Don't get scared because you have plenty of time, so you can risk less, which is much better for your trading psychology anyways. If you risk less, it's going to be easier for you to enter the trade. So it's going to be achievable to achieve the 6% target, so you can move to the next account, which would be $40,000 account. And you have a great opportunity to scale up to 4 million. And it is a great opportunity to trade huge funds, and especially for the people, like I said in the beginning, who don't have big funds on their own.
And that's it, guys. Thank you so much for watching this video. I hope you enjoyed it. I know it was nothing really new, and I probably talked, like I said in the beginning of the video, the same things that other traders talk, that other mentors talk, because there's really nothing new under the sun. It's the same things that we use, the same principles. It's just the way you apply it, the way you make it personal to yourself. So you are the one who is creating the strategy. Now this was mine, and this is how I trade. Thank you so much for watching this video. I really hope you enjoyed, and I will see you in the next one. Trade carefully, risk less, less is more.